Good afternoon. My name is Stephen Antico. I'm a partner director with Garfunkel Wild. I'm a member of the corporate practice group, the tax practice group, and the healthcare practice group. Today, I'm joined by my colleague, David Gold. He's a partner. He's a partner in our corporate practice group, as well as our healthcare practice group. The purpose of today's webinar is we're going to be discussing the Corporate Transparency Act. So the webinar is aptly titled The Road to Compliance, Understanding the Corporate Transparency Act and the FinCEN Beneficial Ownership Reporting Requirements. As part of today's presentation, we're going to be discussing the Corporate Transparency Act. We'll be discussing reporting requirements and exceptions. We'll be talking about and describing who is a beneficial owner. We'll also be discussing the contents of the Beneficial Ownership Information Report. And then lastly, we'll be discussing with you key compliance dates. Now, in connection with this presentation, we're going to be going through the Corporate Transparency Act, and there will be questions that you can ask at the end of this presentation. In addition, we will be recording this presentation, and we'll be making it available to you via email, as well as it will be posted to our website. I'm just going to progress to the first slide. First, thank you very much, David. The legal background. The Corporate Transparency Act was the product of a 10-year federal effort to combat money laundering, fraud, and other financial crimes that were affected and effectuated through shell and front entities. The Corporate Transparency Act was adopted and enacted in 2021. The Corporate Transparency Act tasked the United States Department of the Treasury, Financial Crimes Enforcement Network, and the acronym for that Financial Crimes Enforcement Network is referred to as FinCEN, with the implementation of the CTA. FinCEN developed the Beneficial Ownership Information Reporting Rule effective as of January 1, 2024 to effectuate the CTA. The stated purpose of the CTA is to collect basic identifying information on those individuals, and we will discuss what a beneficial owner is later, who own and or exert a certain degree of control over certain business entities in the United States. And these are called reporting companies. The intention of the CTA is to facilitate the distribution of this accumulated information to governmental agencies to protect the United States national security and the United States financial system. And its essential information will provide this essential information to national security, intelligence, and enforcement agencies on a state, local, as well as tribal basis. So
what is FinCEN and what does it do? FinCEN, the United States Department of Treasury Financial Crimes Enforcement Network, serves as the U.S. Financial Intelligence Unit. It identifies, investigates, and analyzes suspicious financial activity like tax evasion and money laundering reported by banks and or government agencies, and it coordinates information sharing among law enforcement agencies and offices, both domestically and abroad if necessary. And the goal is to combat illicit finance and the abuse of shell and front companies by criminal and other bad actors from laundering or hiding money or other assets in the United States.
The Beneficial Ownership Reporting Rule. As of January 1, 2024, reporting companies must file a Beneficial Ownership Information Report. And for this discussion, and as will be commonly used in the marketplace, it is referred to as a BOI report with FinCEN. As I mentioned, this presentation is intended to answer the following questions. What entities are considered reporting companies? Who is a beneficial owner? What information is included in a BOI report? When does an initial BOI report need to be filed? When must a BOI report be updated? Who are company applicants? And what are the penalties if a reporting company does not file a BOI report?
So what is a reporting company? Reporting company is any domestic entity formed by filing a document with the Secretary of State or similar office in the U.S. or any U.S. Commonwealth or territory. Any foreign entity registered to do business within the U.S. on filing a document with the Secretary of State. It includes LLCs, PLLCs, LPs, business trusts, and other similar entities. The key is if you file with the Secretary of State, so ordinary trusts typically would not be reporting companies, as with general partnerships and sole proprietorships as well. They're not reporting companies.
And importantly, just to kind of take that, as David had mentioned, the primary threshold is when you do in fact file, some sort of documentation, formation documentation, charter documentation with a Secretary of State or similar analogous office. Now, in the United States, you can operate as a general partnership. Now, again, you don't necessarily need to file with a state governmental authority. You can just act as a general partnership and report your taxes for tax purposes on a partnership tax return, which is Federal Form 1065. And the same is true for a sole proprietorship. Oftentimes, clients of ours will contact us. They may be individuals that want LLC protection. Once we file, LLC formation documents, at that point, it triggers the reporting obligation under the Corporate Transparency Act. But if someone wants to basically conduct business and then report that separate business as part of their Schedule C on their tax return, then they can do so. But again, the threshold and the trigger is the formation documents and the filing with the Secretary of State or similar office. David?
So the date of formation doesn't matter. All entities have to comply with the CTA unless they're exempt. There are 23 exemptions for different types of entities.
Now, this slide contains the exemptions to classification as a reporting company. As David mentioned, there are 23 exemptions to an entity status as a reporting company. Many of our firm clients may qualify for an exemption. We do represent a lot of nonprofit organizations that have qualified as tax-exempt organizations, and we also represent a lot of large organizations that satisfy the large operating company test. However, if indeed you do have any questions regarding whether you have an obligation to so file, we as a law firm have created our FinCEN committee, and we're available really at any time to answer any questions that you may have. Now, as we discussed, clients that are tax-exempt entities, large operating companies, and/or a subsidiary or other exempt entity will not be required to file a BOI report. Now, a large operating company is a company with at least 20 full-time employees in the United States, an operating presence with a physical office in the United States, and more than $5 million in gross sales or receipts, but excluding gross receipts or sales derived from outside the United States. So note that when determining an exemption status, the entity's total gross receipts or sales cannot include funds received from foreign sources. Now, importantly, many of you are probably saying, well, if I form an entity in the future, it is anticipated that we're going to have at least $5 million of gross revenue, and we're going to satisfy the other tests. It is unfortunate, however, but when you form that entity, at that point, you do not have $5 million of gross sales. So accordingly, you will have to file a BOI report. Now, later on, you can become exempt because you do satisfy these criteria, but you will, in fact, need to file an initial BOI report. Now, another question, and it's kind of an interesting one, because if anyone knows about the formation of a tax-exempt organization, what precedes the formation of a tax-exempt organization is your initial formation with a Secretary of State office as a nonprofit organization or a not-for-profit organization. So once you are that, you at that point are not tax exempt. You at that point must satisfy your filing requirements under a Federal Form 1023 if you want to be a tax exempt charitable organization, or a Federal Form 1024 if you want to be another type of tax exempt organization other than a 501c3. So albeit your goal may be to become a tax exempt charitable organization, you start off as a nonprofit or non-for-profit, which will then trigger the obligation to file a BOI report.
Okay, who is the beneficial owner? The beneficial owner is any individual who directly or indirectly owns or controls at least 25% of the ownership interests of a reporting company, or exercises substantial control over the reporting company. And substantial control can refer to an individual exercise control over a reporting company through board representation, ownership, control of a majority of voting rights, or through any other contract, arrangement, understanding, or relationship that allows the individual to exercise substantial influence over significant decisions of a reporting company.
Okay, so before we proceed to the next slide, the first bullet point says owns or controls at least 25% of the ownership interest of the reporting company. Later on, we have a slide that's going to show you intermediary ownership. So it does not need to be direct ownership. It can also be indirect ownership. And we will get to that intermediary slide, and I'll bring that to your attention. Okay, what is an ownership interest? Reporting companies are required to identify all individuals who own or control at least 25% of the ownership interests of the reporting company. A reporting company may have multiple types of ownership interests. And again, this list is quite comprehensive, and the form of interest that an individual owns or possesses in a company may very well trigger the obligation to report that individual as a beneficial owner. So the following are types of ownership interests: equity, stock, or voting rights, a capital or a profits interest, convertible instruments, options or non-binding privileges to buy or sell any of the foregoing, or any other instrument, contract, or other mechanism used to establish ownership. So if you're thinking that David and I are purposely trying to confuse you, we are not. This came directly from the Small Entity Compliance Guide promulgated by FinCEN. So as you can see, these are very comprehensive terms. They're very amorphous terms. So when you think about a capital or profits interest, a profits interest typically is what I use, in connection with an LLC that's a partnership for tax purposes. You'll have a capital interest, and a profits interest only allows somebody to participate potentially upon the sale of that respective company. However, profits interest is purposeful. So a convertible instrument, if people are using safes or convertible promissory notes, those would have to be evaluated for the purpose of determining whether the individual who owns or possesses interests and rights under that convertible instrument will then satisfy the 25% test.
Next slide, we have examples of different types of ownership interests. See, Steve mentioned capital and profits interest, equity or stock, convertible instruments, options, and then there's also a catch-all for anything else.
Correct. And as you can see, and we would encourage you to read this slide, because again, we as a firm are looking to basically educate our clients and inform them of the obligations that emanate from the CTA. But as you can see, there's a number of different criteria and categorizations that you'll now need to be aware of in connection with your potential obligation to file a BOI report because of the respective interest that you're issuing to different individuals possessing such rights. Now, one of the boxes, you can see option or privilege, and it's described any put, call, straddle, or other option or privilege of buying or selling equity, stock, or voting rights. Now, importantly, disregard the nomenclature of any interests or any documentation that you as a firm or your company is going to be issuing. If you issue warrants are going to fall within this. If you issue options, equity grants pursuant to equity incentive plans, things of that nature, all of that could readily be captured. So please do not tie, the use of these terms as perhaps being the sole delineating factors. It really depends upon the interests that are being issued and granted. So beneficial owners who exercise substantial control is any individual who meets any of the four criteria exercises substantial control over a reporting company if the individual is a senior officer, for instance, president, CEO, chief operating officer, CFO, general counsel, the chief information officer, the chief development officer can definitely fall within this category too. The individual has an authority or has the authority to appoint or remove certain officers or a majority of directors of the reporting company. So if an individual has such authority to appoint or remove officers, again, satisfies the beneficial ownership test. The individual, and again, this is a very, very amorphous term, is an important decision maker. Okay, again, this was taken directly from the FinCEN Small Entity Compliance Guide. So as you can see, it was written in a very general way, but again, it's definitely kind of like a shroud over many of the types of individuals who may operate within your company. And lastly, the individual exercises any other form of substantial control over the reporting company. So as you can see, the operative term is substantial control, but it's a very subjective term and a very subjective definition.
And here we have indications of substantial control. Clearly, if you're a senior officer, you have substantial control. If you appoint or remove senior officers or a majority of the directors, you also have substantial control. And any important decision maker, and they give you some examples, reporting company's business, finances, or structure. So if you're head of M&A, for instance, you could fall within that, even though you may not have a senior officer title. And then there's a catch-all again for any other form of substantial control.
Trust and indirect control arrangements. A trustee of a trust or similar arrangement may exercise substantial control over a reporting company. Now, as David had indicated before, we're contemplating business trusts. These are trusts that are formed through the formation or the filing of a document with the Secretary of State or similar office. The following individuals may hold ownership interest in a reporting company through a trust or similar arrangement. A trustee or other individual with the authority to dispose of trust assets, a beneficiary who's the sole permissible recipient of trust income and principal, or who has the right to demand a distribution of or withdraw substantially all of the trust corpus and assets, a grantor or settler who has the right to revoke or otherwise withdraw trust assets. So as you can see, trust documents are also going to be creating this respective authority. And as you're embarking upon a path of using a business trust, you have to be mindful that irrespective of the fact that a person may have certain rights and such rights, perhaps given them the authority over one of these respective elements, that would then trigger the obligation to report them as a beneficial owner. Now, indirect control arrangements. Indirect control arrangements are individuals who can own or control interest through contracts, arrangements, understandings, or otherwise. Examples of indirect ways to own or control interest in a reporting company are owning or controlling one or more intermediary entities or the ownership interest of any intermediary entities that separately or collectively own or control interests of a reporting company. Now, as I mentioned to you before, when you get to a slide, that's going to be a very interesting slide as we walk you through the analysis to determine whether individuals who have an ownership interest in a certain entity, like a subsidiary, would have to be reported as a beneficial owner for the reporting company. So we're going to go to the next slide, which is really going to demonstrate to you that FinCEN is looking at attribution. So David, why don't you start us off?
Sure. So, as Steve mentioned, it's direct and indirect ownership. So in the examples above, individual A owns 27.5% of the reporting company. So that person's clearly going to own over 25% and is going to be a beneficial owner and have a reporting obligation.
And if I can, and the way that we're determining the 27.5% is really through attribution.
Right.
So if you take a look at the lower corner, you're going to see individual A, all right, has 30% of company Y. All right, company Y has 50% of the reporting company. And then later on, you're going to see that A also has 25% of company Z. Company Z has 50% of the reporting company. So it's as a result of the indirect ownership, what I call and what we call attribution, that A's interest equated and aggregated to 27.5% of the reporting company. So as you can see, when you're doing this analysis, you're going to have to look at your tiered operations and your tiered companies for the purpose of determining appropriate attribution to determine whether your respective shareholders or ownership interest holders are in fact beneficial owners for this purpose. David?
Correct. So just following through the examples, individual B has 25% of more because they own 70% of the company that owns 50%, so that's 35%. Individual C doesn't have an ownership, but he or she's CEO and president, so that's substantial control. So,
and if I can, so
sure.
when you're doing your analysis for the purpose of determining whether someone is a beneficial owner, remember, you have to look at their ownership interests, both direct and indirect, as well as their substantial authority. So as you can see with individual A is a CFO. Again, that falls within a substantial authority bucket. Individual C, okay, CEO and president, falls in the substantial authority bucket, but does not fall in the ownership bucket. So a person can be both. So you're going to have to, at this point, make an assessment. Are they both? Are they one or the other? David?
And there's no limit to the number. So, and you also don't file the reason, but you need to file for all those people. Okay, as Steve was saying, beneficial owners, the company can have multiple beneficial owners. Several of them can exercise substantial control. A few others can have at least 25%. As I was just mentioned, there's no maximum number, but each reporting company will have at least one beneficial owner. And reporting companies aren't required to report the reason that an individual is a beneficial owner, whether it's substantial control or ownership.
Okay. Now, I want to go back to the last slide. As David had mentioned, reporting companies are not required to report the reason that an individual is a beneficial owner. Now, most importantly, at this point, many of you may be asking yourselves, you may want to gain access to what's the form for reporting. And we will be talking about a BOI report later, but I just want to mention to you now, it has not been promulgated. It has not been made available. So we as lawyers and lawyers throughout the country have been asking, FinCEN on their frequently asked questions list and lines, when are you going to be making these forms available such that we can start to look at them, assess them, for the purpose of assimilating that into our respective practices? It's not available. So I just want you to know that, again, this is all going to be coming online as of January 1, 2024. But until then, at least you'll be educated and you'll be kind of informed as to what is going to be your obligation as of January 1, 2024. Exemptions. When an individual who would otherwise be considered a beneficial owner qualifies for an exemption, the reporting company does not have to report that individual as a beneficial owner in its BOI report. All right, 5 exemptions for individuals. A beneficial owner is a minor child. The reporting company should instead submit the information for the child's parent or guardian, and the exemption expires when the child turns 18. So as you can see, when it comes to reporting, you're going to have to be mindful now of personal criteria and characteristics of individuals that have certain rights. So if you have a child who has like an interest in a company who's 15 years old, suddenly you're going to have to report that child's parent or guardian, but you're also going to have to keep track or annotate in your records when that child is turning 18. So at that point, you could submit a BOI report for that child who has just turned 18. Next, the individual acts on behalf of an actual beneficial owner as a nominee, intermediary, custodian, or agent. So if you have a bank that perhaps is acting as some sort of intermediary or custodian, you're not going to have to file a BOI report for that respective bank or similar person. Next, the individual is an employee whose substantial control or economic benefit is derived solely from employment status and whose employment with the reporting company is not that of a senior officer. So, for example, a salaried property manager might exercise substantial control over a reporting company, but because their control is derived solely from their status as an employee, they are exempt. So, you might have to, individually evaluate, people who are part of your governmental hierarchy. So if you have like what we call, managers, managers who are basically acting, on a day-to-day basis, et cetera, then again, you may have senior managers and executives that would definitely satisfy the criteria for beneficial ownership reporting. Next, the individual, its interest is a future interest, could be through inheritance. And the next one is important, in connection, our public finance group wanted to, get a better understanding of this. We spoke with them individually. Okay, if the individual is a creditor of the reporting company and does not meet any of the criteria of a beneficial owner, they do not have to be reported. So for instance, if we represent many commercial lending institutions and banks, et cetera, in connection with credit facilities. The bank would not have to file, or the reporting company would not have to file on behalf of a bank that has a security interest, et cetera, because it's underlined. It's basically supporting, loan documentation and a loan arrangement between the parties.
So what is the BOI report? The BOI report is a list of basic identifying information about the reporting company and the beneficial owners who either own at least 25% or exert substantial control over the reporting company. For the reporting company, you need to list the full legal name, any DBA or trade name, and the current U.S. business address, state of tribal or foreign jurisdiction of formation, or if it's a foreign reporting company, just the state or tribal jurisdiction that they first register in. And in each case, the IRS tax identification number. For the beneficial owners, you need to list their name, date of birth, and their residential address. And you also need to get the ID from either a passport, driver's license, or other state-issued ID, and you have to submit an image or picture of the document. As Steve mentioned, the portal doesn't go online until January 1st, 2024.
Great, thank you, David. So let's kind of look at the beneficial ownership information. The beneficial owner's name, all right, date of birth, residential address, an ID number from a passport, driver's license, or state-issued ID. That is a lot of very personal information. And when you are now, working to facilitate, capital infusions, or you're looking to create a joint venture, you cannot have an individual kind of say, I'm going to kind of stand behind the curtain. I'm going to be an owner, but I don't want to be disclosed or anything like that. That does not work anymore. That is the primary purpose of the CTA. It's transparency. So when you are starting to kind of solicit individuals, and part of your subscription packets and documentation must clearly now ask for their full name, for their date of birth, for their residential address, and also, as David mentioned, you need to get an image of either a passport, a driver's license, or other state-issued ID. These are all going to be, this is, a threshold information that you're going to need for the BOI report that you will need to maintain in your company records. Okay, BOI report confidentiality. All BOI reports are confidential. They're going to be stored in a non-public database and will only be accessible to law enforcement agencies who submit a request through a United States federal government agency to obtain the BOI report for authorized activities related to national security, intelligence, and law enforcement. With the reporting company's consent, financial institutions will also have access to the BOI reports, but only upon a proper submission of a request to FinCEN. But as you can see, the reporting company must consent for financial institutions' access to the BOI information. Now, this is a note, and this is as a result of numerous discussions that myself and David have had with lawyers, at firms, throughout the metropolitan area. We've learned that the information, the reporting companies should maintain copies of all information submitted to the portal, because once such information is submitted, it can no longer be accessed by the reporting company. So accordingly, once the information goes in, you really, from what we understand, from FinCEN, releases, that information is not going to be readily available even to the reporting company. So you do want to make a record of everything that is in fact reported. So periodically, you're going to have also potentially obligations and covenants in respective documents that you have with employees who satisfy, the beneficial ownership criteria of substantial authority, like your CEO, CFO. They're going to have an obligation to update your records, informing you of changes regarding their addresses and things of that nature. And the same should also be implemented in connection with your ownership structure. So you definitely want to have covenants in your buy-sell documentation, your shareholders agreements, your investor rights agreements, your operating agreements, your LLP agreements, obligating owners of equity in those companies or other interests to notify the company of change of information.
FinCEN identifier. So a FinCEN identifier is a unique number that FinCEN issues to beneficial owners, reporting companies, or company applicants, which we'll get into later, upon request of the individual or entity. Basically, you have to submit the same information you're required to submit up front. And once you do, you get a FinCEN identifier. So if you're a beneficial owner of multiple companies, you can just give them your FinCEN identifier and it'll link to all that information. You won't have to give the information to each company you own an interest in. Okay, and that's a very important criteria. We as Garfunkel Wild attorneys who interface and interact with clients in connection with the formation of companies, we are all going to secure FinCEN identifier numbers. This way we can provide them to our clients and to you as you then populate the portal with your BOI information.
Also, if any of you have ownership interests in more than one company, getting a FinCEN identifier number, I think, is going to be helpful for you. This way, as you start to capitalize other interests in other companies, et cetera, you're not having to provide all of the same information to what could be 2, 3, or more companies. You give them your FinCEN identifier number, and you've satisfied your obligation.
Right. When does a BOI report need to be filed? So for companies that file on or after January 1st, they're required to submit a BOI report within 90 days of the initial formation. That was extended. It was originally 30 days, and they subsequently extended it to 90. And if you're formed prior to January 1st, 2024, you have to submit a BOI report by January 1st, 2025. Entities formed on or after January 1st, 2025 must submit a BOI report within 30 days of notification of the entity's official formation.
BOI report updates. When does a BOI report need to be updated? Entities must update a BOI report within 30 days if an entity's beneficial ownership changes or an error in a previously submitted BOI report is realized. So the following are examples of when a reporting company must file an updated BOI report. A reporting company changes its name, its DBA, or its address. A reporting company appoints a new CEO or upon the death of a beneficial owner, or someone acquires 25% or more of the reporting company's ownership interest. But remember, it's not merely ownership interest. It could be a variety of different interests that are aggregated to constitute that respective ownership interest. In addition, any change to a beneficial owner's name, address, or reported ID number, such as their passport, driver's license, etc. So we are all, and you are all, going to have to maintain a constant state of vigilance in connection with what your officer's information is. Your respective entity. If you're relocating from one office to another office, you're going to have to update your BOI report. So there's going to be a high level of vigilance that is necessary in order to satisfy this criteria. Now, there's no statutory requirement that beneficial owners must inform the reporting company of any changes to their BOI information. However, as mentioned, the reporting companies and employment agreements or whatever documents exist between you and a beneficial owner, which includes operating agreements, shareholders agreements, buy-sell documentation, et cetera. It could be investor rights agreements. Remember, disregard the nomenclature, meaning the name of the agreement. Think of all of your agreements that are necessary to facilitate new ownership or the issuance of equity interest in your company. So in each of those documents, whether it's an employment agreement, services agreement, buy-sell documentation, et cetera, there should be a covenant that each of those individuals now will update the reporting company with changes of their beneficial ownership information.
Right, so in addition to filing with respect to beneficial owners, each BOI report has to include information on company applicants. Company applicant is any person who actually files documentation that forms an entity or any person who otherwise directs the formation of an entity. So each company applicant of a reporting company formed on or after January 1, 2024 will have to submit a BOI report on an individual basis comprised of the same information required of beneficial owners, except that company applicants are permitted to use their business address instead of their home address. Each reporting company that's required to report its company applicants will have to identify and report to FinCEN at least one company applicant and at most two. All company applicants are individuals, and companies or legal entities are not company applicants.
Yeah. Now, a company applicant is oftentimes going to be, the lawyer, that works with you, the Garfunkel Wild lawyer who you work with for the purpose of forming a company. However, some clients may work through their accountant. So if in fact there's an individual who's facilitating the filing of your documentation to form an entity, that person becomes a company applicant. So you will have to ask him or her, or that individual should just provide to you their company applicant information. Now, as we mentioned, the company applicant's information is somewhat similar to the information for a beneficial owner. However, the company applicant information can contain a business address. So we, as a law firm, the lawyers that work with you in connection with formation, we, as I mentioned, are going to obtain, FinCEN identifier numbers, and we will be able to make those available to you for the population of your BOI reports. Penalties for failing to submit a BOI report. So what happens if a reporting company does not timely file its BOI report? There are civil penalties, or fines of up to $500 per day for, during the period that the violation continues. And there's also the potential for criminal penalties, which is imprisonment for up to 2 years and or up to a fine of $10,000. Note that in September of 2023, FinCEN did state on its website and within the small entity compliance guide that if you correct a mistake or omission within 90 days of the deadline for the original report, you may avoid being penalized. So senior officers of the reporting company that fail to file a BOI report may in fact be held accountable. So as you can see, the CTA and FinCEN, they have substantial authority both on a civil and potential criminal side in order to confer, such sanctions on individuals, on senior officers and those responsible for reporting company filings in connection with the BOI reports.
So obligation to report. So the obligation to report is solely that of the reporting company. Obviously, we're here to help with any questions and help you navigate requirements, and you have our contact information. Happy to help.
Correct. And the FinCEN committee is comprised of myself, David, and other partners and attorneys at Garfunkel Wild. We're committed to helping you and providing, information and education. Now, we as a firm are not obligated, nor are we accepting or assuming the obligation to file a BOI report. This belongs to the reporting company, but we're here again as an informational resource. Now, note, and we will be circulating information. There are, large, what are called corporation filing companies, such that if in fact, you're filing an entity or creating an entity, large corporation filing companies are working, with, clients and reporting companies for the purpose of, we'll say, accumulating the information for the purpose of the submission of the BOI report. So we will be providing information regarding, the companies that we have identified that seemingly have the ability to support on a seamless basis, our clients. We'll be making that information available, pursuant to a GW compliance alert. So on the next page, these are the additional resources that we utilize for the purpose of creation of the slide deck. So you have the BOI rule fact sheet. You also have the small entity compliance guide. As I mentioned to you, that guide was very, very helpful and informative for us as we were preparing this slide deck. There's not a lot of information that's been promulgated. And, so, you have law firms, you have business advisors, you have accounting firms that at this point are trying to accumulate the information as it becomes available. We hope that you found our slide deck informational and informative. And again, we as a firm, and we here at Garfunkel Wild, we've been doing this for more than 40 years. We're an extraordinary resource in the corporate and the healthcare, sector. We stand ready to support and assist you in any and all respects. So we do, in fact, hope that you found this presentation and this webinar helpful. And again, my name is Stephen Antico. I'm joined by my partner, David Gold. But it's been our pleasure to, talk you through and explain the Corporate Transparency Act and the related FinCEN rule requirements. Do we have any questions?
A question just popped up.
So I'm just going to put on my glasses and demonstrate my maturity. What happens if you have a co-owner, CEO, CIO, etc., and they leave the company? Do you send another form that says they are no longer identified with the company? It's not that you'd send a form that they're no longer identified with the company. You would just update your BOI report that they're no longer associated with your company. You do not have to identify, who their successor employer is, et cetera, but you'll just be, updating your information that's on file with FinCEN as to the fact that, you no longer have them as your CEO.
And you would have to put the new CEO on the new report. You'd have to update your report to include the incoming CEO.
And we also have another question. The fines and penalties seem excessive for an administrative task Is there a movement to reform this by the small business community, lobbying groups? A small medical office really doesn't have time to do this type of stuff every time some little thing changes, like an owner moves or something else like that. And I'm going to use that person, Ken. That's a very, very apt and astutely stated question. I'm a part of the New Jersey State Bar Association business section, but I'm licensed in both New York and New Jersey. We've been looking at the CTA for a period of 2 years. And initially there was a thought, okay, is this really going to be something that is implemented? Is there really going to be an emphasis on this? And many, bar associations like New Jersey and other, like New York, many of the larger bar associations have been waiting and waiting to see if, in fact, something is going to modify this or just, soften this. And the answer has been no, even until September. And that's when the small entity compliance guide came out. That really kind of at that point reiterated to all that the CTA and FinCEN is here to stay. So someone has asked, where can we get copies of the slides? I understand that we're going to be making the slide deck available, to our clients, to the participants in this respective webinar. So that will then be forthcoming. But again, as you can see, we can be contacted. I'm going to go to that prior slide. Okay, the FinCEN committee at garfunkelwild.com. If you have questions or you have, or you seek, just general informational guidance, you can definitely email us. And at that point, we'll put one of our partners and one of our associates on the matter to answer any questions that you may have. So, with that said, we will be here for you, and we look forward to, working through all of this with you. So at this point, I do not believe that there are any other questions. Oh, I'm sorry.
Trying to slide down to see if there are any other questions.
Oh, okay.
No.
Okay. So at this point, we have stopped the screen sharing. I'm just going to. So, with that said, it was my pleasure. And David, thank you very much. So, again, we stand ready. And again, as part of the Garfunkel Wild team and mission, we will always be here for our clients and we'll provide information as it is requested. So we want to say thank you very much for participating in this webinar. And we look forward to, speaking with you in the future. Stay safe and well.